Hello, everyone. Good morning from this part of the world. And depending on what time zone you're tuning in from, I do want to wish you a good afternoon and good evening. I'm very excited to welcome you to our final review for the week, where we shall be delving into how well the asset we're monitoring so far this week has been doing, and of course, use the historical data and fundamentals developments to strategically position ourselves for today's trading session. First of all, very sorry, wasn't able to run the Forex Morning Mastery on Wednesday due to some personal engagement. I had a project running and I needed to be there in person to supervise the process. And unfortunately, I never had the time to share with you the reason why I was not online. In fact, I was off grid during Wednesday and Thursday, so I wasn't really able to take on any trade during the last couple of days. But hopefully, we will be doing something today. And I'm beginning to see some interesting trading setup this morning that could help us to at least close the week on a much more positive note. Though we started the week very good, we had some profit on Monday stroke Tuesday's trading session before my absence. We are going to be talking about that and see how we can move on for today's trading session. So please bear with me on that one. So far this week, we have been monitoring three financial instruments, which includes the US All Spot, the GBPUSD, and of course the XAUUSD. And there's been some interesting development in the market. Let's talk about the economic calendar first of all. Let's talk about what has been going on from the economical standpoint. So hold on a second. Let me share with you my screen. Hold on a second. Okay, I think I have it here. So, so far this week, the US crude oil has been dropping significantly. We saw higher tariffs. US China trade tension escalated to higher tariffs and fear of slower demand from China, of course, will impact the oil prices negatively. And of course, we saw this happen through. Then the EIA also cut oil demand forecasts. OPEC also is intending to increase supply in May, and we know how more supply results into less demand, which obviously equates to bearish pressure, which has been the major factor that has been affecting the US crude oil negatively. And as a result, oil slipped for the second, for about three straight sessions, I think Tuesday, Wednesday, and Thursday, due to weak demand outlook dominating the financial landscape. Then on the GBP USD front, we've seen some very strong move to the upside thanks to GDP data from the UK. We saw the manufacturing sector. Let's see, I think we have it right here. Okay, so you can see here this morning we saw the GDP rise by 0.5%, way above the market expectations at 0.1%. And to make this sweeter, we can see it also rose higher than the previous month. Then we look at the manufacturing sector in the United Kingdom as well. Data this morning is showing positive results. We can see the actual data for the industrial production came in at 1.5%, way higher than the previous month, which was at a deficit of 0.5%. Then we saw the manufacturing production also rise by 2.2% as against the previous month that came in at a deficit of 1%. And of course, the US CPI data came in very, very weak. We saw the consumer price index coming in at a deficit of 0.1% as against the previous month, which was at a 0.2%. And what does this tell us? It tells us that inflation is gradually tuning down and becoming weak, and this has resulted into a shift in the sentiment in the market, where majority are now expecting the Feds may start cutting interest rate, and this has resulted into a weaker US dollar. So as a result of this, the GBP took advantage of this and rallied all week, heading into a fourth consecutively daily gains, giving us some significant profit on that one. If you are a GBPUSD fan, you don't want to miss out on today's analysis. Then on gold, we have gold hits a fresh all-time high above the $3,220 level, driven by rate cut bet and geopolitical fears. So we are going to be looking at all of this together and see how we can strategically position ourselves for the next move. And mind you, today being the last trading day of the week, it comes with its own psychological peculiarity, where most of the time we see market participants round off their trading activities ahead of the weekend, and this could result in profit-taking activities, as we could see price move against the direction of the prior leading price action. So we are going to be taking all of this into account while we review the current market dynamics. So stay tuned in, as you do not want to miss out on these valuable ideas. Now, moving into the development for today. So as always, what happened here? So as always, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And look at the technical details on the chart. We are going to be deliberating on the 1 hour time frame, of course, which is our execution time frame. And at the beginning of the week, we had a simple trading setup where price during the first 12 hours of the week was trading below our key level at the $62 area. Remember, this was our key level after we try to understand the market structure on the higher time frame. So we had our key level around the $62 area, and we saw how the week started. The week started on a strong bearish note. Price dropped from the $62.30 level into the $59.25 area, as you can see here. Then we saw price come back into that resistance line, dropped again, breaking down the support line to trigger our first sell position for the week. And we saw price move over 400 pips. That's about 7%, 7.5% decline from that support line of that range bound structure on Tuesday, before we saw buy pressure resume on Wednesday / Thursday's trading session. So it has been quite a good week on the USOILSPOT, and you know what we said on Monday, that we will be looking at selling the US crude oil below the $59.25 level. And for those of us who capitalize on that opportunity, well done and kudos to you. Now, this morning I placed some sell positions this morning after taking into account the recent development in the financial landscape, and it's important that we talk about this before we go into how we are planning for today's trading session. And if we look at the fundamentals, the macro and fundamentals actually are stacked against oil prices right now, and not until demand sentiment stabilizes or supply risk intensifies, rallies are likely to be sold. Now, this is a rally fade market for now, and it is very reasonable that we continue to look out for patterns and structures that support selling ideas. Now, we have the tariff on Chinese goods, which has surged to 145%, slamming sentiment and raising fears of weaker oil demand from China. Remember, China is the world's top importer of crude oil, and if this trade war affects that economy negatively, we may likely see a reduced demand from this economy, which obviously will exert selling pressure on oil prices. Then we also have the EIA cut global oil demand growth forecast, which previously it was at 1.2 million barrels per day. Now the recent focus says that it will drop to 900,000 barrels per day, which obviously dovetails to less growth, less fuel needed, and this could be attributed to the recent trade war tensions. Now, tariffs are seen as a drag on the entire global economy, not just the US and China, so slower growth, reduced industrial and transport fuel use worldwide. So for me, and from a technical standpoint, it is quite obvious that price may likely continue to drop to the downside, and how far that will be is what we don't know. So at this point, I will continue to look out for selling ideas, though oil prices still have some support from the pipeline shutdown. We learned yesterday that a key US supply route is offline due to a spill, and this could influence short-term supply constraint risk. And of course, the sanction on Iran oil network. During the week, US slapped new sanctions on Iranian oil, including Chinese storage ops. So this could, if this is enforced, this could tighten supply in politically tense region. So though this could support an uptrend scenario for oil prices, but the downside is very, very high. So what will be our plans today? Now, in terms of the bearish approach, which is what I'm going to be looking at this morning, we want to be looking out for ways to sell rallies around the range bound structure we identified at the beginning of the week. Now, if you look at my chart here, this was where the price was hot at the beginning of the week. We saw price was ranging between the $62.30 level. In fact, most of this week's trading activity was confined within the range bound structure. We saw price break down on Tuesday, but climb back within the range bound structure on Wednesday. So it's more of uncertainty around this particular structure. So if I want to be selling, I want to be seeing price drop below that support line at the $59.25 area to continue a decline. Now, besides this, any soft data from China or further OPEC supply or another EIA demand downgrade could trigger selling pressure. So I want to be looking to sell within that support line. And if I'm going to consider buying, I will only consider buying on strong intraday reversal signal or supply shock headlines, that is worsening Iran sanctions or extended Keystone shutdown. Now, if unexpected OPEC plus pause comes in, or stronger than expected China data, or sharp inventory draws, this could project some buying opportunities around this market. But in the meantime, the way things are going right now is looking as if price may likely continue the downturn. So what I will do here is I already have a sell position running at the moment with the hopes that price will continue the downturn. Unfortunately, if you look at the bottom of your screen, you will see that I have 3 sell positions. That was not intentional at all. So what happened was that I placed a sell, but I didn't see it trigger. So I kept on pressing the sell button, thinking that it was a network thing. And at the end of the day, when it got triggered, I just saw 3 sell positions triggered all at once. Now, I don't want to close it since I am leaning towards a bearish move, so I kept it open. Let's see if it continues to come in the favor of the sellers. If it does, and if it begins to rise and it breaks above the $60.70 level, then I might want to close 2 or 1 out of that position. So it wasn't intentional at all. So right now, how do we intend to navigate this market? Like I said earlier, I want to be selling, keeping a sell below the $59.25 level. If you are yet to join a sell in this market, I will advise that looking out for selling opportunities below the structure is reasonable at this point. So we could place a sell stop order below that structure to capitalize on a potential downtrend scenario. Now let's look at the 15 minutes time frame if there is any structural details that could further support this bearish sentiment. So if we look at the 15 minutes time frame here, I want to zoom into the last 6 to 7 hours. And if you look at that closely, this happened during the Asian session. We saw this massive move to the upside before price evolved into a reversal setup looking like a double top structure. And if we do this appropriately, we will have our neckline somewhere around the $60.20 level. So let's mark the structure out here, and I will explain to you in a moment what I am thinking about this recent development. So we have the $60.20 level, which is the neckline of this potential reversal pattern. And you know, when we have such reversal patterns on the chart, we want to be selling the breakdown of the neckline, which had already happened. As you can see here, we already have the breakdown of the neckline, and this was one of the major reason that made me to consider selling the US All Spot. Now that price has broken down the neckline, if we had missed out on this opportunity, there is a tendency for price to come back, retest the structure in an attempt to continue the downtrend move. So that is another option that we could look out for if you had missed out on that first sell. So let's look out for price coming back to retest the $60.20 level. Multiple rejection is a very good signal that buyers are losing momentum, and then it could favor the sellers. So let's look at that option there. And if it so happens that price breaks above the previous high here, then I will be negating the bearish bias. But at this point in time, we maintain a bearish bias. Let's see how far this bearish momentum will go. Then have your sell stop below the $59.25 level to maximize the downtrend scenario. So that is what I'm looking at on the US crude oil for today. I strongly maintain a bearish bias thanks to the US-China trade tensions, demand outlook slashed by the EIA. We have a slower global growth forecast, and of course, OPEC plus output increase for May are major drivers influencing sellers at this point in time. Now, if we are going to consider buying, maybe as a result of sanctions on Iran oil network or Keystone pipeline shut down, where will be most reasonable or suitable to consider buying the crude oil? Now, for me to consider buying at this juncture, I would rather want to see price break out, retest that key level at the $62 area if we are talking of a long-term approach. However, it is very possible that we could see buying ideas even before the breakout of that resistance line happens. Now, how do we capitalize on that opportunity? Well, if we look at the recent impulsive leg that started here on Wednesday into this area, where this old downtrend scenario could turn out to be a retracement, and if sellers find it difficult to break down the $59.25 level, we could see a reversal pattern that could incite that uptrend move. Now, secondly, there is a trend line here after connecting the series of lower highs here. And if we look at what happened here in the last 5 to 6 hours, it appears that price had already broken out of that descending trend line, which is a signal that buyers might be on the verge of increasing the momentum. And considering today being the last trading day of the week, we could be seeing profit-taking activities from that strong bearish move we saw on Tuesday. Now, a breakout retest of this trend line could be a very good opportunity to buy. But one thing I will do here instead is to wait for price breaking out of the $60.70 level. So if I want to consider buying, I want to see price break out, retest the $60.75 level. So that is what I will be looking out for. Let me place this arrow right here. So if this can happen, then we can start considering buying ideas, then place a buy stop order above the $62 key level area to maximize the potential of that bullish move. So this is how we are going to be trading the US crude oil today. And of course, if there is any updates during the course of today's trading session, I will be updating us accordingly on my Telegram platform. So that is my simple idea on the US oil spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list for today. Stay tuned. All right. So in the absence of no question, I guess we are all on the same page. So let's see how this will play out in the next couple of hours and see if we are either going to see price breakout of the $60.75 level for buying ideas or the breakdown of the $59.25 level for confirmation for our sell position. So I will keep us updated if anything new comes up. So I wish us all the best of luck on the US oil spot. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD. And for those of you who are conversant, who are aware of the positions on the bottom of your screen, you saw that I had the buy position running earlier. Now it's at its TP target. I placed the TP target around the 1.312, I guess. Yes, 1.312. And it hit TP target this morning. Let me show you. I think it's still in my history. Okay, so you can see it right here. I had it closed with 185 pips at the 1.312, as you can see here. And of course, the momentum since the beginning of the week has been positive for the GBP. The pound sterling is being carried by real economic strength and weakness in the US dollar. But the long-term upside may be limited by the Bank of England's dovish outlook. For now, the pound is playing offense, but we want to be very cautious, especially around the Fed and the UK inflation update, which could change the current dynamic in this market. Now, for those of us who had capitalized on the GBP USD at the beginning of the week, so this was the structure we were looking at. Remember, we had a very beautiful demand zone around within the 1.28250 and the 1.28750, which was exactly where our key level was. And you know how we treat such structures. Whenever we identify them, we wait for price to maintain. If price maintains above the structure, we look out for buying ideas. But if price drops below that structure, we sell. Now, with this understanding in mind, and after monitoring the character of price action during the first 2-3 days of the week, we had some buy pressure on that area. Remember, we bought at the beginning of the week above the key level at the 1.2875, but it didn't do very well at all as we saw price come down, taking us out of that sell position, of that buy position in a loss. Now, on during the later part of Monday, we saw how price broke down the support line of that range bound structure, breakout retest of structure, giving us a sell signal. And of course, we saw price move about 120 pips, giving us an opportunity to recoup some of the losses we incurred from that previous buy before price action snapped back into the entry point. And not until Thursday we begin to see some traction, which resulted in a buy above that key level at the 1.28750, which was in line with our technical expectation that whenever price climbs above our key level, we want to be considering buying. And since price broke above the key level, we can see price had moved over 230 pips in our favor. And for those of you who capitalized on this opportunity, well done and kudos to you. And for those of us who still have a position running at this point, I will be encouraging us to move all stop losses and secure it right now, because anything could happen. I think we are looking forward to a couple of data today. Today is Friday, April 11th. We are looking forward to the producer price index from the United States, which is, of course, an inflationary data from the producer's side. This is coming in around 1:30 p.m. local time. That's about 12:30 p.m. UTC. Then by 2 p.m. UTC, that's 3 p.m. local time, we will be waiting for the publication from the University of Michigan. That is the Consumer Sentiment Index. And from what we see here, it appears that the expectations is low. As you will see, the consumer sentiments projection is at 54.5, way lower than the previous month data, which was pegged at 57. Then if you look at the producer price index, it's coming in a little bit higher. The expectation is coming a little bit higher. And so that also was what the consumer price index was expecting, higher than the previous month. And we saw what the actual data was, way below the expectation. So what I'm going to be suggesting here, I have a strong feeling that the inflation figures will come in lower, which could further favor the British pound. So with that said here, we are going to be looking at how we will be navigating this market around this area. And I think we have a resistant line here around the 1.31150 level. Now let's mark that level out first of all. So we have the 1.31150, right? So at this point, you will see what happened here last week, Thursday. We saw how it was difficult for buyers to break through that structure, and right now price is back into that area, and the last candle here shows that there was a sharp rejection of that same level. Now the question as we head into today's session is whether sellers will gain momentum again from this area, pushing price to the downside, maybe back into that ascending trend line. So let's look at the trend line here. Let's bring out our line chart and then let's connect the trend line. And from what we have here, I think we have a couple. We have this one here. So we have a trend line here. So we may likely see price retrace back into this trend line before another wave of bullish momentum will happen. So, and if we look at the distance between where price is right now and that trend line, we are talking of over 200 pips in price movement. So do we want to take advantage of that? Well, the only reason or the only structure I want to see here that will make me sell the GBPUSD is to cite a reversal pattern at this 1.31150 level. So I want to see something like double top structures where the breakdown of the neckline could be a good confirmation to sell, or an head and shoulder pattern where the breakdown of the neckline of the head and shoulder pattern will be good enough to consider selling. So that will be the only condition that will make me sell the GBPUSD and have the TP around the key level at the 1.28750. However, if we see more upside surprises in UK data or further US dollar weakness, especially if PPI and Michigan Sentiment Index disappoints, we could see price break above the 1.31150 level. And for me, a breakout retest of this structure will be a beautiful confirmation to continue the uptrend scenario. So that is basically what I will be looking at to consider buying the GBPUSD today. So like I said earlier, for those of us who still have a buy position running, kindly move your stop losses, secure the current buy positions while we wait patiently to monitor price action around the 1.3115 for new trading opportunities. Now I just looked at the bottom of the screen right now and I can see that our US oil positions are doing very well right now, with averagely 36 pips in profit. And if you took advantage of that opportunity with me, it's appropriate that we move all stop losses and secure the current sell position. So I'm going to be moving my stop losses to the entry point right now. Let's secure this position as anything could still happen from here. So I'm moving mine to 59.6, securing the positions right there. Let me do that for all of them. 59.6. I'm not in a hurry to close this position, remember. So we have the 59.6 on all the three positions you see here. So I just did that, and I encourage you to do the same as well while we continue to monitor price action. So back to the GBPUSD. So the 1.31150 is going to be playing a significant role today, and depending on what happens around this area will determine if we are going to be adding to our buy or getting ready to sell. So I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I'll take 5 to 10 seconds off. Let's see if there are any before we move into the final assets on our watch list. All right. So, in the absence of no questions, I want to, I want to think that we are all on the same page, right? Hope we've marked out the structures accordingly, as we're definitely going to be using them as a reference point to guide our independent trading decision. So we focus on the 1.3115. Let's see what happens there. If a reversal setup comes in, we sell the breakdown of the neckline. But if price breaks out, reaches the 1.3115, we want to continue the uptrend move. So I wish us all the best of luck on the GBPUSD. So moving on to the final asset on our watch list for today. So the final asset on our watch list is the XAUUSD, my favorite, popularly known as the gold spot. And of course, look at what happened since the week began. Remember, we have been buying this asset, especially above the $3,015 area. Remember, this was our key level for the week, and since the break above the structure on Tuesday, price had maintained that bullish momentum all the way to the upside. The Trump tariffs are the week's biggest storm cloud, shaking stocks and stoking inflation fears and keeping the gold very, very relevant at this point. But we want to be very careful about this sudden rise in gold prices, because profit-taking activities could happen anytime. And remember, today is the final trading day of the week, and we could see market participants who had capitalized on this upward trajectory take some profits ahead of the weekend. Now, for the sake of those who are not part of Monday's session, let's quickly run through what we saw about this market that led to the situation we have here today. Now, at the beginning of the week, we had a range-bound structure. Remember, the week started on a strong bearish note. As you can see here, price started below the 3,025-ish. Then we saw what happened immediately. Price tested the 2,970 area. Price climbed back into that area at the resistance point, giving us a range-bound structure to work with. Now, one interesting thing about this range-bound structure was the fact that it is running, it was evolving around that ascending trend line we spotted on the higher time frame. Now let's look at the higher time frame on the 4 hours time frame here. Let's look at it. Let's look at what it was looking like. So we can see this was the ascending trend line we were using to navigate this market this week. Now, around that ascending trend line was our demand zone. We saw a couple of breakdown of this demand zone, which was a fake breakdown, as you can see, evolving into a double bottom structure, which is technically considered to be a strong reversal pattern leading to that upward trajectory. Though we had some sells, remember at the beginning of the week we were selling, we sold some. Look, let me show you. So we sold, this was what we were looking at. So I said we will sell the breakdown of the key level at the 3015 right here. As you can see, price moved about 500 pips within that sell move. We made some profit off that. Then we begin to notice price climb back up, and Tuesday, Wednesday and Thursday I was off station, so I didn't trade at all. But yesterday I placed a buy somewhere around here. I think I placed a buy here, and I was able to take some profit off the charts. And for those of us who were able to run through this price movement even in the absence of the Western session, well done. Kudos to you for being faithful to our analytical approach. And if you're still in the buy position, I want to advise you to move all stop losses, as we could see some volatile price movement today. And remember, price is within uncharted territory, and usually when price is within this unknown area, there is always this fear of missing out gradually coming into the market, as those who had bought the bullish move may want to start taking profit due to the fear of price crashing from this particular area. Now, besides this, the upward trajectory is still looking very promising. We have a weaker US dollar at the moment, and a declining US dollar usually makes gold cheaper for holders of other currencies, hereby increasing the global demand for the gold commodity. Now, the US imposed 145% tariff on Chinese imports is also sparking fears of a trade war escalation. And in this kind of era, investors will want to hedge their capital with gold, which is considered to be a classic safe haven asset. Now, to further puts salt to wound for the US dollar, we saw a CPI coming in below expectations. I think we talked about this earlier. We saw the CPI data on Thursday coming in below expectations. We saw a 2.4% year on year as against the 2.6% forecast, along with a weak core CPI. Now, traders are beginning to bet on Fed rate cut based on this, which for me is considered to be bullish for gold, since lower rate reduces the opportunity cost of holding non-yielding assets such as gold. And producer price index is coming up today, and there is a high tendency for this data to also come in below expectations. Now, FOMC members are beginning to acknowledge the challenge of balancing slowing growth and inflation. So concerns over the economic impact of trade measures and rising jobless claims suggest rate cut could come sooner than later. So as a result of this, I'm beginning to suspect that the price of gold may continue to rise. Now, this morning, this was what I was able to mark out on the chart to try and decipher the way the market is thinking at this point. So after price tested that all-time record area at the 3,220, you can see that price action has been confined within a range-bound structure. We see between the 3,220 and the 3,190, this has been ongoing in the last 10 to 11 hours. It started during the Asian session, which further emphasized the prevailing uncertainty in this market, which is not something new or strange to us at this juncture. And of course, you know how we treat our range-bound structures. Whenever we have this kind of structure, we want to exercise patience, allowing both buyers and sellers to complete their negotiation. And then if price can break out of the resistance line, we're looking to join an uptrend continuation. So I'm leaning towards this whole consolidation phase turning out to be an uptrend continuation pattern. However, in as much as the uptrend scenario is looking promising, remember, was it yesterday or 2 days ago, we saw Trump announce a 90-day tariff pause for other countries except China. And while China is hit hard, this temporary de-escalation for other countries calms some global trade fears at this juncture, dampening the urgency of safe haven flow. So in as much as the upward trajectory is looking very strong, we cannot ignore the potential that profit-taking activity could come as a result of this dampening of the urgency for safe haven flows. So as a result of this, to consider selling, I want to, if let's say today any strong US data comes in, especially labor market or inflation rebound or hawkish Fed surprises, we may see a pullback happen. And if we are going to be considering selling, where will be most suitable for us to consider selling? You must have guessed right. If you have been with me for a while, we want to see price breakdown, retest the 3,190, which is the support line of that range bound structure, before we consider selling the gold commodity. So to give a visual representation, I would like to see price breakdown, retest the structure, then I want to consider selling the gold commodity at this juncture. So this is a very, very simple trading setup ahead of today's trading session. A range bound structure, a consolidation phase, where depending on the direction of the breakout will determine where we are going today. So that is my simple view on the XAUUSD. I hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I just noticed now that my USOILSPOT has closed at break even, and it appears buy pressure is resuming again around this area. Let's scale down to the 50 minutes time frame and see what structures is going on here. So we can see we have a consolidation here in the last 1 hour. You can see here, and within this consolidation phase there is a hammer candle here, which theoretically tells us that buyers are beginning to gain some momentum. So will this suffice today? Well, we don't know, but one thing for sure, and based on the current structure, based on the fundamental factors we talked about earlier, I am still strongly leaning towards a bearish move. So in that regard, I will place a sell stop order below the wick of that hammer candle. So I'm just doing that right away. You'll see it at the bottom of your screen. I'm placing a sell stop order. I'm still willing to place a sell around this area. So I still hold on to that bearish bias, even though we see a hammer candle here. Now remember what I said earlier as regards to buying the US crude oil. We want to see price climb back above the $60.75 area before we consider buying. That's right here, taking out that double top structure we marked out earlier. So I'm still leaning towards a sell, and that is what I think will happen today based on the fundamental factors. Remember, we talked about the US-China trade tensions escalation. We talked about the slash in the EIA demand outlook, slower global growth forecast, and of course, increase in OPEC plus output, all of which theoretically is expected to exert selling pressure on crude oil prices. So based on this, I will maintain that bearish bias. So there you have it. I think one of my sell positions has gotten triggered at this juncture. So back to the XAUUSD. If you have any questions as regards to what we talked about, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. So I guess it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. Then, mind you, I didn't mention that I already have a buy position running on the gold commodity already. I got it triggered above the resistance line, though it's currently running in a loss, but hopefully it will climb further to the upside and we make some profit on that one. But it's okay. It has been a wonderful moment with you guys. I'm very sorry for not showing up on Wednesday. I explained to you earlier the reason why, and thankfully I'm back here today and to trade with you, and let's see how the market is going to play out. I shared my ideas on the USOILSPOT, the GBPUSD, and the XAUUSD, where we have simple trading setups to help us navigate the market today. And if you've marked them out accordingly, well done, kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. All right, and always remember that every decision we make in the financial market is more or less an educated guess. So as a result of this, and with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. If you did, you want to be part of our subsequent editions. We're going to be back here again on Monday, where we shall be starting the week on a positive note as always. And of course, we will be here on Sunday for the Forex market prep, where we will be preparing for the new week. So I look forward to seeing more of you. Same time on Monday, 9:30 a.m. West African time. That's 8:30 a.m. UTC. And so on this note, I wish us all the best of luck. Do have a wonderful evening and a wonderful weekend. Trade smart, trade consciously. Bye-bye.